Big news from the world of high finance. Bill Ackman, the famed hedge fund manager, just took his Pershing Square holdings public. The initial public offering, a massive $10.5 billion splash, instantly becomes one of the largest ever. Ackman, known for his bold moves and even bolder pronouncements, is shaking things up again. This isn't just another IPO. Pershing Square, a heavyweight in the world of activist investing, is now open to the public. That means anyone with a brokerage account can buy a piece of Ackman's high-stakes bets. The implications are huge, both for the notoriously secretive world of hedge funds and for ordinary investors looking for an edge. Ackman's move has Wall Street buzzing. Is this the beginning of a new era of transparency in the hedge fund world? Or is it a savvy maneuver by a financial titan to consolidate power and attract even more capital? One thing's for sure, the game has changed. To understand the magnitude of Ackman's move, you have to look at the man himself. Often compared to Warren Buffett, Ackman has built a reputation as a shrewd investor with a knack for spotting undervalued companies. But unlike Buffett's more passive approach, Ackman is known for his activism. He buys big stakes in companies and then uses his influence to push for changes he believes will boost shareholder value. His tactics have earned him both admirers and enemies. Some see him as a corporate raider shaking things up for a quick profit. Others view him as a visionary, willing to challenge the status quo and unlock hidden value. Love him or hate him, one thing is undeniable. Ackman is a force to be reckoned with. This IPO is a gamble, even for someone with Ackman's track record. By opening up Pershing Square to the public, he's exposing his strategies and potentially inviting more scrutiny. But if it pays off, the rewards could be enormous. Ackman is playing for high stakes, and the world is watching. The initial reaction on Wall Street has been a mix of shock and awe. Analysts are scrambling to understand the implications of this unprecedented move. Some see it as a sign of confidence in the market, a signal that Ackman believes the bull run has further to go. Others are more cautious, wondering if this is a sign that the smart money is starting to cash out. One thing is certain, this IPO will have a ripple effect throughout the financial world. Other hedge funds feeling the pressure to adapt may be forced to follow suit and open themselves up to public investment. This could lead to greater transparency and accountability in an industry long shrouded in secrecy. For average investors, this creates both opportunities and risks. On the one hand, it offers a chance to invest alongside a Wall Street titan. On the other hand, it's important to remember that past performance is no guarantee of future results. Investing in a hedge fund, even one as successful as Pershing Square, comes with inherent risks. So, what does all this high finance drama mean for the average investor? In short, it's a wake-up call. The world of investing is changing, and the old rules no longer apply. The lines between Wall Street and Main Street are blurring, and access to exclusive investment opportunities is no longer limited to the ultra-wealthy. This democratization of finance is a double-edged sword. On the one hand, it empowers individual investors with more choices and greater control over their financial futures. On the other hand, it also exposes them to greater risks if they don't fully understand what they're investing in. The key takeaway is this: knowledge is power. Before jumping into the world of hedge fund investing, it's crucial to do your homework. Understand the risks, the potential rewards, and the investment strategy involved. Don't be afraid to seek out professional advice to make informed decisions that align with your financial goals. Ackman's move could be a watershed moment for shareholder activism. By going public, Pershing Square is essentially giving ordinary investors a seat at the table. This could embolden other activist investors and lead to a surge in campaigns aimed at shaking up corporate boardrooms. The implications for corporate governance are significant. Companies may face increased pressure to prioritize shareholder value and be more responsive to investor concerns. This could lead to a more dynamic and accountable corporate landscape. But it also raises concerns about short-termism and the potential for activist investors to prioritize quick profits over long-term growth. The success or failure of Pershing Square's public debut will likely influence the future of shareholder activism. If Ackman can deliver strong returns for his new investors, it could usher in a new era of investor engagement and corporate accountability. However, if the venture falters, it could cast a shadow over the entire activist investing model. Ackman's gamble is not without risks. The hedge fund world is notoriously volatile, and even the most successful funds can experience periods of underperformance. By going public, Pershing Square is exposing itself to greater scrutiny and the whims of the market. Moreover, the influx of new capital could create its own set of challenges. Managing a larger pool of money can be more complex and may require Ackman to adjust his investment strategy. There's also the risk that the pressure to generate consistent returns for public investors could lead to riskier bets. Despite the risks, Ackman's move holds immense promise. If successful, it could disrupt the traditional hedge fund model and open up new avenues for investors seeking to diversify their portfolios. It could also force companies to be more responsive to shareholder concerns, leading to better corporate governance and increased value for all stakeholders. The timing of Pershing Square's IPO is noteworthy, coming more than a decade after the 2008 financial crisis. The memories of that tumultuous period still linger, serving as a stark reminder of the inherent risks and complexities of the financial system. While the current economic climate is vastly different from the pre-crisis era, some analysts worry that Ackman's move could be a sign of excessive risk-taking and a potential harbinger of future instability. Others argue that the increased transparency and regulation in the wake of the crisis have made the financial system more resilient. Navigating this new financial landscape requires caution and vigilance. Investors must be aware of the potential risks involved and make informed decisions based on their individual financial circumstances. Regulators, for their part, must remain vigilant in monitoring market activity and ensuring that appropriate safeguards are in place. Bill Ackman's decision to take Pershing Square public is a bold move with far-reaching implications. It has the potential to reshape the landscape of global finance, blurring the lines between Wall Street and Main Street and ushering in a new era of investor activism. Whether this experiment succeeds or fails remains to be seen. However, one thing is certain: Ackman's gamble has set in motion a chain of events that will have a profound impact on the future of investing. The world is watching closely, eager to see if this is the start of a sea change in global finance, or a risky bet that could backfire spectacularly.